don't need to be a genius to make money trading crypto, but you do need to know the landscape of where you're trading. In today's video, I'm going to show you exactly how to identify demand zones and how I personally like to trade them. Specifically on the Ethereum chart, I'm going to go back to 2021. I really enjoyed teaching this chart way back in the day. If you guys have been following me for quite some time, or if you were in the group, if you took any of my classes, you know how often that I teach demand zones and seeking them and how I play them on this chart, just because the run up was so fantastic with how these demand zones were printed and how they were respected. And what I like to tell people all the time is that past price action is going to dictate the future. So it's important to always reflect back on what price action was doing back into this 2021 price action. Before we broke out of the range, we printed these compressed higher lows, just took us up higher, super compressed on this way up, and price eventually broke out of this range. And this is specifically where I'm going to take price action back. So let's take the replay button. I haven't even taught this class in quite some time, but I'm excited to teach it here just to give you guys a nice little taste of what I like to look for on the daily. And what I'm going to do here, because it's the first time looking back at this chart in some time, I'm going to just kind of play price action with you guys and identify things as they go and how I would play it. We see here price broke out, and I want to identify again. We're going to scroll back to the daily, show you guys what had happened previous so you could have a good taste for what's happening in this price action. It's been quite some time since 2021, so it's a good refresher for anybody that was in the market or for anybody that was not in the market at that time. We had a big run up here to that all-time high that we printed here, and the price eventually printed this level of demand here, and then supply that swiftly broke through it. Now I'm going to explain to you what a level of demand is. You see here on the daily how these one-day candles, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, about 14 candles on the daily that pushed up before price got a rejection. People were willing to bid this rejection close to these highs that we saw rejected previously. That was coincidentally enough the top end of this range that printed here before we swept these lows and printed this SFP that took us up here. We are aggressively looking to bid this level before the next move up. We got an impulse candle up out the retest of this box. This signifies to me that we have a strong level of demand on the one day. So again, what is a demand zone? A demand zone is a level of rejection followed up by people willing to bid that rejection on the pullback, and then shortly after an impulse candle on the push up, taking you out of this order block, and then if you're lucky, you get a retest right into that demand zone before the next push up. Needless to say, I'm going to explain demand zones a little bit different in today's video. I don't want to explain it for an aggressive push up. I'm more or less going to explain how to play these demand zones for a pullback. That way you can leave resting bids so that when the demand zones are retested, you don't have to be at the charts. You can set your alerts. These levels of demand more than likely are where people are willing to bet on the next legs up after the rejections happen. You can see here, after this one-day candle printed outside of this one-day demand block, we pushed back up and took these highs, pushed back up, and closed the next daily candle above the one-day demand level. This to me signifies that we have people willing to bid for the next move up. We have a one-day candle there with a higher low in the next day candle, and then a close back above this order block. That to me is a demand zone. It signifies to me that we have a strong level of demand because people were willing to bet that one-day order block before the next push upwards. So let's take it down to the lower time frame. Now that you guys have the concept of demand and how you could play it, I'm going to take price action down to the 4 hour so you guys can get a feel for it. And I just want to explain, just like I did on the one day, but on the 4 hour. You got to remember, guys, I say the higher the time frame, the higher the conviction, specifically because there's less demand zones that are going to print on the higher time frame and give you a chance to enter than on the lower time frame, naturally so. You can see here on the run up, we really didn't get any consistent levels of demand until we really came close to breaking the top end of that range. And that's because we're at resistance. People are willing to short or long anticipating a push. If you were patient and you're gonna bid it the way that I'm telling you to, then you're not really looking to do anything when these blocks are printing. And you're willing to be patient and you're more or less leaving your limit orders within a specific zone so that when that level tests, you're already in the trade, you have a clear validation because you set yourself up for that, and it's gonna get you in that entry without you having to be on the chart at that time. And if you're not at the chart at that time, you're in regardless. I like how this 4 hour level broke up, impulsed out of this order block without retesting. To me, that's a clean level of demand, It has not retested yet, so the bids are fresh. And if you're gonna bid there, you're more than likely going to have a good position for the upside. You remember where we drew this range? That's good conviction and good confluence for you to say, okay, if we retest below this range, it's more or less, for a little deviation play before we break up. And if you're not in off the lows, you could always enter thereafter, but this is to give you the best type of entry. So I'm gonna draw a rectangle within this level, and I'm gonna just signify that as my level of demand. You don't have to do it any specific way. If you wanna get real technical with it, you could, really get these lines good. And do not get me wrong, when I'm really spot on with my charts, I definitely do like to do things like this. And you could see in comparative to the 1-day demand level, we swept this 4-hour and pushed upwards. Closed this candle above. This to me signifies a clean level of demand. People willing to bid for the price to impulse up without retesting. That means that if price retests this level, for me and how I like to do things, I'm willing to bid this level. So how I like to get my bids in and my invalidation, I like to first measure out how thick or how loose of a level this is to bid. This is about a 2 to 2.5% level of demand. So I'm going to anticipate leaving an invalidation about 3 to 4%. I'd say anywhere from 2.5 to 3%. I think that's a little bit tight, especially with the moves that we're having in today's day and age, right? We're getting some wild whipsaw price action. So I would definitely leave them a little bit loose, but way back in the day, a couple years back, the amount of the demand zone is how much I told people to keep as their invalidation. So what does that mean? If you have a 2 to 2.5% level of demand, you're going to naturally keep your invalidation about 2 to 3% under that level of demand. Like I said, you could go a little bit loose if you'd like to, you could go a little bit tighter if you'd like to, but these levels of demand should not slip too much. If they're strong levels and they have not tested before, more often than not, they are going to hold you in at least for a push up. And I'm going to show you guys with the tool how I would play this play. So this is my level of demand. I'm just going to put, this TP at around 3,500. I'm not really going to go too much on TPs and how to do that in this video. I really want to just identify demands with you guys. For the sake of the video, let's keep these at about a 4% invalidation. Let's do about a 1.5 to 2x DCA bids for your invalidation. So the DCA, you would do about 25% to the top, 25% in the middle, 50% towards the end. And I'm doing that in simple terms. If you want a DCA, I know people that do 100 bids in some levels, people that do 10 bids, 10%, 50% at the end. However you want to layer your bids is up to you. Just remember, you're going to do lowest to the top, heaviest to the bottom, because you want to weigh out that average entry as much as you can towards the bottom, and then put your invalidation below that. You're not guaranteeing a specific entry point, and you're not going to get left behind if you left a specific entry point. Let's say you wanted to get filled at the lower end of this demand zone, and price came down and only retested the top. You wouldn't have an entry, but if you layer your bids, even though you're not getting filled all the way, you still allow yourself to get in that entry. So let's say I have a $1,000 account and I'm willing to risk 4% of my average entry. If you're risking $400 on this trade, 10x, and it's a 4% move down, you're gonna lose $40 on that trade. Already have that in your head before you enter the trade, and now you're gonna see how price plays thereafter. Remember, we're looking for a clean test of demand. So when price came down into this level, and I'm gonna go to the lower time frame just for this example alone, just so you guys can see how price reacts, how price gauges confluence under these levels. Price was stalling up here, first began to print these hourly divergences above this level of range that we broke, right? We needed to break this range. People were willing to even bid that this level would hold for a push higher, psychological level of support and resistance at around 3,000. We pushed up, printed these bearish divergence here before rejecting out of the range, and then printing its first lower high out of this uptrending price action. When we got into my level of demand that I just painted on the 4-hour, we then began to print 1-hour divergences within my level of demand. This, to me, gives me confluence to enter a trade. If I'm just looking at a chart, I didn't even identify my level of demand, and I was just seeing price action compile up in this level, we had an RSI divergence, I'm tying in confluence, and I'm looking for long. I'm not looking for shorts just because we lost a level on the lower time frame. I'm not looking for shorts, I'm looking for longs, because this is a potential deviation of where people were previously trying to bid. And that's how you gotta look at these levels of demand, guys. And just to pile up a little confluence there, we also had a 1-hour level of demand. For the sake of this trade, I'm going to draw it out, but for the sake of the video, I'm gonna just stick to 4 hours on the way up here. But to add confluence onto this trade, we had a pileup of hourly demand into a 4-hour demand block with a 1-hour divergence in that zone. That is enough confluence for you to be very much in a trade, for you to be rest assured that your level of demand is good. And you see how it played there after the pop. Even though you didn't get a full fill, you're still in that trade, and now you're riding risk-free. Let's go back to the 4-hour time frame, guys, and I'm gonna keep climbing here. This level of demand did not get tested for a long time. I do remember this price action. We came close before eventually holding higher. I just wanna show you guys how price action plays after we're already in that entry. Remember, we already have an entry down here. Not saying we didn't take profit on this move up. You should always take profit on these moves up, and you could always enter right back down at the bottom end of the range. But remember, we're playing levels of demand. So when this level ever gets closer tested again, you know you're gonna get a strong reaction. And you see that happening here, right? If you're playing these levels of demand, you're looking for an impulsive move up and price to respect that level. So after we got this cascade down, and remember, you don't wanna be too aggressive with demand zones because we got a very, very, very big move up here. So you gotta assume price is gonna act weird the higher up we go. And we saw this cascade down here, right? If you were playing these levels of demand here, obviously you were swept down. We see here, it came close, front ran, and kept it up with a lower high before cascading downwards. You also had this level of demand here on the 4-hour that got cascaded downwards again. Now these are levels that you could have bid, and obviously as a demand trader, you would have played them. Now, I've sped up price action. Now that we have explained what a demand zone is and how I would play it, I'm gonna show you how price action reacts around that level thereafter, and then how other levels of demand after this cascade happened were respected on the way up and how you would have played it. So you could see when price came down after this cascade around this level, we kind of just chopped around until we eventually took out these invalidations, right? These were invalidations for people that were rebidding this level previous. We were already in that level, we already took profit, and we got a nice move up at that. Enough to say, you know what, let's chill, wait till the price comes back and see what it does. Price came here, chopped around before eventually flipping up, coming back down, chopping around, flipping back up, chopping around, flipping back up. But what did it do when it was chopping around this level? It printed these higher lows each and every time before eventually breaking up and flipping the range. You can always play and identify these levels of demand after the fact, but treat them as broken order blocks. You don't want to be so aggressive with willing to bid this demand on this next move down, assuming that people that were looking to bid previously are looking to do that again, and price has to take liquidity from somewhere, so it's going to naturally take people willing to bid this level out until it can't no more. And price shook people out of this level until it eventually flipped it up. You could easily enter your longs here with your invalidation below that low for a move back upwards. After price looks to accept back in the range, we are looking for levels of demand again because now we've accepted back into the level that we were trading in previously. We cascaded back to this level and held because people are willing to bid. So naturally, we're going to have to look for demands, assuming that price is going to go higher. So as a demand trader, we're not explaining what happens on the lower time frame. We're just looking for these levels. So I'm going to naturally just paint out levels of demand after impulse moves up and after these closures, and you could see how they react. People are willing to rebid that aggressively, but I would keep my bids in this level. Again, you're gonna measure out this level. That's about a 2% zone. And you're gonna keep your invalidation at about 3 to 4% for the sake of the video. We have a target, right? We're gonna target anywhere from these highs, anywhere to these highs, and see what happens. So price comes down, almost retests us fully, prints a higher low before pushing upwards. That is a clean level of demand and gives you more confidence that we should be climbing higher in the near future. We got another beautiful and crystal clear example of demand that prints after this range here. So price has a reason to chop around this range. This is a previous high, right? This is a previous high here of which we were targeting off this level of demand. So price is naturally going to resist. People are willing to short here, clearly, but people are also willing to long for a push higher. We got higher lows, we pushed these highs, and people that were already shorting have already been exhausted and they're already being tested. People that are in these shorts had a push down, it came up, had another push down, it came up. So now people are either willing to short or long here. And obviously the impulse up tells you that people are willing to long, meaning that there's resting bid orders in this level of demand. People are willing to bid this level for another push back upwards. It might not retest before these highs are taken, it might retest after, or it might retest before. But this is to say that people are looking at this level. So when price comes to, you can either act on reaction, meaning that you don't have to leave your bids because it is an aggressive level up, don't get me wrong, or you could just leave your limits and chill. So we're gonna measure this level. That's about a 1.5%. That's an ideal level of demand. You don't want to be playing too loose because you might not get all your bids filled. You don't want to play too tight either because it might get ran straight through. And you want to play at about a 2.5% invalidation onto this play. And again, just look to target where you're comfortable with taking profit, man. You're never wrong with taking profit and moving your stops up. Again, with these levels of demand, you want to move your stop up after the reaction happens because you don't know how it's going to react after. Bam. So price came down, retested almost fully again, and then pumped upwards about 6.9%. That's a beautiful play on leverage, guys. Do not take that for granted. And then it eventually compresses before print this next leg up. Now, before it printed this next leg up, it compressed tight and printed a demand zone. Now again, guys, there's a reason these demand zones are printing. Okay, just like I explained in previous examples of this video, you can go back into price action and show why these levels are resisting. This level is resisting for an obvious reason, and you're going to be able to see that back in the chart, which is the reason why shorters and longers are having a battle here before eventually the longers prevail and price moves back upwards, right? We're already in down here. You can anticipate demand over here and have your invalidation here if you've either exited your position fully or you were looking for a re-entry, assuming that price compresses for a move upwards. That's more advanced stuff, I would say. And then you could see price comes down before retesting this level of demand, of which we've already painted, and then continuing back up. Now again, the higher up we go, the more risky it gets. Naturally so. You guys saw what happened, this reaction here. We just kept climbing higher and higher and higher, higher and higher and higher before price had to do something like this. The higher up you go, the more risky it gets. Take that precaution into effect. The more times the demand's tested, the least likely it is to hold. So this level of demand right here is going to get respected, as you can see here. And the interesting part about this level is when we're coming up into this price action, we only got one test of demand here. It kind of tested the top end before compressing higher, and then price moved up higher. When we got to this level here, price retested one time before compressing up higher, did not retest twice, and then moved up higher. This level of demand, price not only retested once, but retested twice with a higher low. You want to take that into account and make a mental note. When that demand got tested, we retested twice, meaning that it wasn't as strong as the demand levels prior. People weren't aggressively looking to bid it as much. So price had to get liquidity twice and more confirmation before continuing up higher. So the higher up you go, you know, okay, we could potentially be exhausting this trend. Let me be a little bit more cautious. Let me risk a little bit less. So this level of demand is what I'm highlighting here. We had a retest once, right? So if you were rebidding just like I taught you guys, where you're looking to bid the top end to the low end with your invalidation slightly below, this level got retested on this initial push. And then it came back out of it about 3.5%, which is a good bounce on futures, guys, on leverage. If you're leaving an order there and you don't want to look at the chart, or you're not looking at the chart at the time, and you're looking for a quick in and out play, that's a beautiful fill for a move back up. But if you were looking to rebid this and you were more patient, taking into account what has happened, maybe you're looking at the chart at the time it's happening, which I would suggest, especially if you're new and you're playing futures, you saw that it swept that low, but still held this low and then continued back out of that box. You don't want to subject yourself to losing out on this demand play. If you're a 4-hour demand trader, they're so far and few in between that you're going to want to keep your attention onto these levels and what's happening in them and around them, so that you can either enter there after it took you out of your initial play, or you could hold your position and you're not really being too aggressive to moving your stop losses up. And it happens to me all the time we're in a trade here, it's in profit, we move our stop losses up, we're like, all right, I'm risk-free, I could just hold my trade like I did in the previous trades. Not all the time, guys. You can see here it swept you out, needed more liquidity before moving up. And you could also tell, and make a mental note, guys, that when these blocks of demand printed, they were a little heavier, right? These demand blocks were heavier than this one was. This one got pushed down and created a kind of hammer wick candle before moving up. Take that into account and make a mental note of that for when these levels test. And then always, guys, keep attention onto your RSI divergences too. These RSI divergences more than often are going to be respected in this level. So if you needed more confirmation to hold this play or to rebid this play, you could have entered that hourly divergence, guys. We had a 1 hour divergence into this level, right? When was the last time you had an hourly divergence there? When we retested this demand block that we had down here, we didn't even really make an hourly divergence. We almost did, but we didn't quite do that. And that being said, you can see how long we haven't made a divergence into a level of demand. This gives you more conviction to hold a trade, guys. Again, I want to just explain all these things because these are the confluences that I use on the daily. This is what I would be looking for if I didn't place limited orders on this trade and price came down, let's say, right down to here. And I'm like, you know what? I missed out on this trade. I'm like, dang, that was a level of demand. But then price came down again. I'm like, what is giving me a reason to enter this trade? All right, let's look for a sweep of these lows. Let's look to re-enter around this level of demand. Let's begin to start entering here, anticipate a sweep down, and maybe a full-on test of demand. And let's take a look at the RSI divergence, see what it's doing. Okay, cool. So now you know what it's doing. You see what everything is doing. Bang. We print and confirm that hourly divergence on that push down. We sweep and close above these lows right here, confirming an SFP. And you're retesting your level of demand on the 4 hour for that push up. That is more than enough confidence for me to enter a trade, and I'm going to do so. So you can see here, price kind of reacts a little bit weird before it begins chopping it around at this level. So obviously, we had this level of demand right here, which is more of a compressed block here, guys. That's not really what we've been explaining on this way out, but it is a level of demand nonetheless. Price is going to react naturally at these highs. You have to be willing to rebid this level of demand after, and you could see if you're kind of tracing these lows, it is looked at as kind of a deviation play, meaning that if I scroll down to that RSI divergence again, guys, I can guarantee you on the lower time frame, you're more than often going to get a good RSI divergence to play to give you just a little bit more confidence and a little bit more conviction to hold on to a trade. So I'm gonna probably have to go on to the 15-minute here. Yes. So on the 15-minute, we had a lower time frame divergence print within a very aggressive level of demand right here. That's enough conviction for me not to short, even if it's just not to short, even if it's for me to have my conviction and my own bias of the market to move up for the day. That's all I need. I need a bias. Every trader needs a bias. You need to think, are we going up? Are we going down? Why? Where from? And that's how I do things on the daily, guys. So you see here, when price compressed, we started to print these lower highs and started printing heavy price action here on this cascade. That to me signals, you know, let's go a little bit risk off here. Let's see what happens. Even if we are playing levels of demand previous, let's be a little bit more cautious. So whether I'm willing to rebid this level, whether I'm willing to rebid this level, whether I'm looking for stink bids in that level, or I'm looking for a retest in here or here or here, I know the risk that's associated with that position, and I know what's happening from this price action. And if we continue upwards, it is what it is, right? We have these small little levels of demand here as well, so they're not powerful levels of demand, guys. We have one level here and one level here. I would really just kind of conjoin these levels and see what happens from that. You see we slice through on this level, but what I want to do, guys, I want to take the tool out, measure how loose that level is. So that's a 1.8% level of demand. Remember, we're doing our invalidations at about 1.5 to 2x the level of demand. So that means that we're going to play about, you know, a 3% stop on this level. So let's say on the low end, I played at 3%. We are still good. We are still in that position. So we would have been almost taken out, and price would have taken us up 5% on futures. That's a good enough position for you to take profit, move your stops up, and just see what happens. I'm not saying you would have had to enter again. Maybe off a lower time frame confluence, you could have entered again. But all I have to say is that this is the first level of demand that we're seeing broken through. In confluence with this heavy price action, enough for me to be an observer, right? A little bit risk off here. So price is eventually going to reject here. I know what happens off this price action, guys. And you could see how well and respected these levels are. You could see how once price rejects out of this level, remember, people are willing to bid, so anybody willing to bid this level 1, 2, 3 times, right? That's a lot of times to rebid a level of poor demand, okay? They're taken out of those positions with flat, heavy, hard 4-hour candles, guys. This is your next level below. We take people out of their positions here, and now we're holding. So people are either willing to long or short this. And judging just by this cascade of heavy price action, people are obviously willing to short this level more. You can play these levels of demand in the future. Just like I said earlier in the video, guys, I wanted to go over these order blocks in the future because they always mean something. If you see me with my blue boxes on my screen, I'm playing these levels of demand thereafter. So even if price, I'm looking to take a short at this level, or I'm looking to take a long at this level, I'm doing so knowing that this was a previous level of demand. And if price comes up to flip this level, I'm looking for confluence to enter. Maybe it's the momentum has exhausted on the lower time frame for shorts, and I think that we're going to reverse back upwards. Or I'm thinking continuation to the downside from this level, and I'm looking for a retest of this level for a move back down. I am making a bias and formulating my plans on an educated guess, judging by my previous analysis for me to do so. I'm not doing so blindly. I'm doing so because I know my levels and I know what I'm looking for. And you're staying consistent throughout. So whatever price action wants to do here, it does, right? It comes up, retests, rejects, and then ends up holding a higher low to come back into this level. People are willing to look for longs here, guys. After a significant push up on the 4-hour, when price rejected harshly after, the first cascade down. That to me is not a level to go extremely heavy on longs, right? At all. And we eventually are gonna look to push up, reclaim before rejecting again. That's messy price action to get yourself involved with. Make sure you understand the risk again, guys. And all that came and transpired into that level, guys, is this top end of 4-hour demand. The first level of demand that got broken through eventually got retested before catapulting down. And then again, it got ran through before rejecting again. So I'm just gonna drag some of these levels out. And I just want you guys to see, like, in hindsight, obviously, but just how well this price action was respected and how well it was to even trade intraday. If you make a formulated guess, guys, you have to form a bias, you have to have your levels painted, and you have to know what you're doing, especially on the lower time frame around these levels. I'm not saying it's easy, but you can make educated guesses to play these levels judging by price action. Like, even when price action swept up this level where it previously rejected from, right here, flipped it back upwards, you could catch good intraday plays around here, guys. Judge your intraday momentum. If you're not an intraday player, you're not a lower time frame trader, you're not even looking at these trades. But this is a lower time frame trader's dream. It's a lower time frame trader's dream, and you're looking at confluences to get you into these trades, whether it be we're trading over the 50 here, we have easy enough invalidation here at the lows to bring my longs up, or it's a lower high here, assuming that price is going to respect this level for a pushback down, or it's a reclaim back of this previous level of support that's flipping back into resistance again, or it's the cascade into this level for a flip back up in these compressed higher lows. These are these educated levels that you're painting beforehand to take you into the future. That is how you identify and play demand zones, how you seek order blocks and play them thereafter, and how you make your educated bets via any confluence you want to play. I appreciate you guys for stopping by. It's been a minute since I taught educational content, and I know a lot of people have been looking forward to it. Check the description down below. Use my link for Blofin. They're an exchange that does not trade against you. Check out WoodsBot after you make that account. You'll get free access. And I'm trading daily at Wealth Group. I got all my links down below, guys. I'll see you in the next. Peace.